Per usual, everything else shows for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's talk about stablecoins today. Stablecoin supply, stablecoin dominance as a trading signal. Stablecoins first rose to prominence in 2016, 2017 with Tether. Obviously, Tether has grown to be the most profitable business on the planet per person, and they are dominating stablecoins. It's going to be interesting what happens after the stablecoin bill in the US gets passed and we see proliferation of stablecoins. But generally, the more issuance we see with stables, the more risk-taking is supported in the market. And we can look at supply-demand of stables to determine oversold, overbought conditions, again, as an oscillator. I wouldn't say it's necessarily predictive, but it will give you warning signs on a relative basis on what we've seen historically. We recently hit 250 billion in total stablecoin supply. Again, most of that Tether and Circle, the company, obviously went public recently. But it's interesting to look back on the Luna blow up, and we've now exceeded that by a lot, right? By 100 billion, and likely that's just going to keep exploding. Another thing to think about is if and when rates come down in the US, what will the stablecoin landscape look like? If we get yield-bearing stablecoins, what will the stablecoin landscape look like? All sorts of fun stuff like that. But at the end of the day, the simplest framework to use is if we get more printing in stablecoins, that is liquidity in the ecosystem. Whether or not that's $1 in your favorite altcoin or not is a different story, but generally it means liquidity in the ecosystem that can support risk-taking behaviors. We can also look at funding for stablecoins in both DEXs and centralized exchanges. That's outside of the scope of this video, but that's another metric you can use where if there isn't any stablecoin to borrow or any USD to borrow, that's generally a warning sign that we're a bit overheated and people are a little too euphoric. If we put Tether against Circle here, the biggest event in the past year has definitely been the election, where we saw a massive spike in Tether and also Circle in the coming days. And there is a little bit of autocorrelation here because if we get more interest in crypto, we get more volume, we get more need for stablecoin, we get more stablecoin demand, stablecoin prices start rising above $1 slightly. That premium allows arbitrageurs to come in, mint the stables through these companies, and then sell them to the exchanges or on the exchanges in the open market and capture that premium. They can go back and then redeem if they want to. But as prices rise, interest rises, stablecoin prints rise. What we always want to see is more and more and more printing, specifically for alts, which certainly need stablecoin liquidity more than BTC. Maybe not so much anymore, but 2016 to 2020, alts relied even more heavily on stablecoins because that's where most of the exchanges got their USD version of liquidity. They really didn't have banking relationships. So to see stablecoins continue to print should be bullish. And again, a catalyst will likely be this upcoming US bill, which should pass. And we're going to see all sorts of stablecoins from all sorts of entities, businesses, banks that may or may not make its way into crypto, but it will definitely bring people into the fold in a different way that we've never seen, because all of a sudden it's a household thing. Everybody's using stablecoins. Overseas, South America, Asia, stablecoins are adopted at a much higher rate than in the US, I suspect. Now, if we look at this as a trading signal, this is stable.c.d. You can pull this up as an oscillator or as something we can use that's tradable, right? It's fun to look at everything always all the time and see all this data and okay, stablecoin dominance is 8% today. What does that really mean? Why should I care? We have to put something on this to see, okay, what happened at market highs versus stablecoin dominance. Clearly, stablecoin dominance is continuing to rise with the issuance of more and more stablecoins relative to BTC in the orange there. So we've got a rising channel on stablecoin dominance, undeniably. So as a signal, again, as an oscillator, I would say, okay, highs versus lows. What does this look like? It makes sense. Crypto prices go up, stablecoin dominance goes down. Thus far, when we've hit relative lows based on the random channel that we've drawn here, that has been highs in the market. So to see a high here, a firm high, a local high in price, just in a snapshot today, doesn't really make too much sense relative to where we are on stablecoin dominance. This says this is a bullish divergence, if anything. We saw a higher high, but we did not see a stab down to the dominance low. And you're, of course, going to get people saying, well, in 2022, it was a similar situation. We didn't actually get down there the second time. and that was the cycle high. Could very well be the case, but I would be more confident saying it's a cycle high if we all of a sudden broke down. If we started breaking down on dominance for whatever reason, that would be very tough to do, but we're talking a turbo acceleration in crypto prices relative to stablecoin prints. Then we could say, okay, now we're getting really towards the end of the cycle. Just as we did in the bottom of the bear market in 22 and 23, stablecoin dominance hit a peak of like 17%. So I would start to get concerned with the cycle if stablecoin dominance breaches this high here, as it tried to, right? It tried to and snapped back. And that's happened a couple times. So look, this isn't perfect, but as a tradable signal, as a warning sign, if we get back down here in stablecoin dominance again, towards 5-6%, 7% towards the end of the year, along with other signals, maybe there's a bear div, maybe there's a pattern to pay attention to. It's never going to be just one thing, but as a confluence metric, certainly something to keep an eye on throughout the rest of the year. And you could probably add another wing somewhere up here as a diag to watch if we do break down, and if people get too bearish, if they get too stabled up. The issue with going to like 12% here is stablecoins have a mint redeem function. So it's probably more likely that if prices get super, super bearish, you're gonna get a capital outflow, and that's gonna sort of keep stablecoins about in the range, right? It's just really in the turbo extremes where you get moves way outside of these bands where stablecoin can't mint and redeem quick enough, or there's some issue with the mint redeem function of stablecoins broadly. But if we're looking for extremes, it's below 7% and above 10%. Setting alerts on that relative to Bitcoin looks to be pretty useful. And it's even more extreme, even more obvious, I think, with alts on this channel, right? And that makes more sense, again, if we think about alts care more about stablecoin liquidity than BTC. This is total 2 relative to stablecoin dominance. And you can see this extreme peak recently in total 2 relative to stablecoin supply. And that generally is the case. The issue is, how predictive is this, right? I think it's really only useful at the extremes, like any oscillator. We can say, well, are we overbought or oversold here relative to stablecoin dominance? I would argue, no, we're nothing. We're in the middle, right? Above 10, and again, we get into trouble with how recoverable that ends up being. Is this going to kick off a 2022 style absolute collapse relative to stables? Or is that a bounce low, right? Is that a rally to buy, or a bear market fake out? That's sort of a game time decision, but we're certainly not there. And we're certainly not at the extremes we were in the beginning of the year, post-election. So I think if we do see another push in Q4, certainly something to watch for. Now, you'd hope into Q4 we'd have tons of stablecoin printing, and that would allow for this reaction function effectively on stablecoin, or on risk assets, on alts, to push even higher, right? If we get a bunch of printing on stables, that allows us to continually go higher on a relative basis. But I think particularly for alts, it's a very, very important metric to pay attention to, and you don't need to look at it every day. You can just set alerts, okay? Again, 7%, 10%, where are we? And effectively, you could probably just ignore it. I'm sure there's other stablecoin dominance oscillators that are available, but those are really the levels I would pay attention to in the next 3 to 6 months. One other thing you can also do to monitor stablecoin activity, on Kraken, there's a Tether USD pair. And you might be thinking, okay, what's the point? Who cares? But if Tether is above $1 on Kraken, generally, again, somebody will come in and arbitrage that and sell stables to capture that premium. If this falls way below $1, it's not that, oh my God, Tether can't redeem. It's the market saying there's too much supply relative to demand, and we are unlikely to see stablecoin prints. You can see we start to see more and more printing the closer we are to 1 and or are above that level. So really since April, right? We've been above $1, and surprise, we've gotten continuous stablecoin prints on Tether. So that's what you expect to see. Either you're printing from Tether and selling to the exchange, or you're buying from the exchange and redeeming with Tether, the company. So as an actionable metric here, you could say, okay, if we are well above $1, like 0.005, then there's probably a pretty good chance that stablecoin demand is in a high point, and we're probably reasonably bullish to push Tether prices that high. You could probably rationalize this the opposite, and you could say, well, people want Tether when they want to be risk off, but I don't think that's generally what we see. I don't have the numbers behind that. This is just anecdotal, obviously, but if we see sustained demand for Tether on Kraken, usually a bullish environment for somebody somewhere in the crypto ecosystem. You can also watch stablecoin prints. This is a Whale Alert Twitter account. I'll put this in the description of this video, along with a link to open yourself up a Kraken Pro account for BTC today. Back in the range, risk off stuff with Middle East escalations from the US. We're also seeing risk off into FOMC on Wednesday, even though it's probably going to be a nothing burger. I really don't like this from a bullish perspective. Still, every time it gets back up here at 105, 106, 107, it just gets smacked down over and over again. So until we break the range, it's hard to just be bullish that we're in the range. I think in the grand scheme of things, the longer we can consolidate at all-time highs, the better. But in this micro to near term, watching this play out and watching this get continually smacked down, not great. Not great. If we just measure this, pick 2 points, you basically get the cloud, the key June, or slightly lower. And that would be satisfactory if we're talking about a potential inverted head and shoulders here, a giant smiley face. You can even draw in some hair here for the resistance at the all-time high. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.